Hello and good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, Tuesday, June 22nd. Well, let's leap right across to the other side of the world to Peter McGuire, sitting in Sydney, Australia. Peter, as CEO of XM Australia. We have Brent trading this morning, Peter, above $75 a barrel. The market looks very happy, very supported. But we had the news overnight of China cutting crude oil import quotas for the second half of the year. Doesn't seem to have taken a step out of the market. Your thoughts?
Well, good morning, Sean. Good morning, panelists. No, it certainly hasn't, Sean. 75 is a little bit of a yaha, let's have a party sort of number. We've been waiting for that to happen for a number of months. A lot of people were very anxious about, and certainly the long traders didn't think it was actually going to happen. And here we are before the end of June, and it's snapped 75.15, I'm noticing. And even with that, the US dollar came under very, very solid move to the upside in the last couple of trading sessions, back above that 92 handle as far as US dollar index. So if the US dollar was back at 90, I think that there's every chance you would see possibly a 76.5 handle on Brent, and NYMEX might be even at 75 itself. So there's the first part. The Chinese numbers, yeah, they take it on the chin. The realization is that the world is opening back up, demand is picking up, and it seems to be a feel good over this Northern Hemisphere summer season, Sean.
We've saw at the Fed decision, or the announcement of the forward guidance, if you like, altering last week. It's clearly the equity markets are still digesting that, but oil doesn't seem to have had any real issue with it.
It seems to be dislocated from the equity markets, and I'll explain one thing. This time yesterday, Nikkei's down 3%. I said, 3.2 nearly. It's up over 3% today, and everything is green except for Singapore, or Hong Kong, I should say. So it's been a very solid move as far as Asian equities today. We saw a good move overnight as far as New York equities. Dow, S&P, and Nasdaq were all bid up. So again, the inflation story is there. I think the overall confidence is there, and that's the issue as far as the taper, and will we see rate rises as early as the end of 22 or mid 22, Sean, or do we wait till sometime in 23? The jury's still out on that one. Traders are enjoying the market and profiting very well from them.
Peter, we've seen obviously some very tangible demand growth in terms of the aviation numbers now in the US, up above 2.1 million, which is below the 2.6 million daily traffic in the US before COVID. We've got the European aviation now up to about 50% of pre-COVID levels. I mean, as this tangible demand comes over the third quarter, and more of it comes back, it's hard to see what caps this oil price from getting to 80.
Well, Sean, sorry, did you want to add anything to that?
No, I was just going to say, do you identify anything that could?
No, I don't, because I think that the overall demand picture is really picking up so quickly. I'll take my first flight tomorrow. I'm going interstate on a flight, but that'll be the first time since February of last year. So that was pre-COVID. So I think that the world is very much engaged, and certainly across Australia, people are flying in and out of different states. We're not flying that much overseas, but it's a big nation. Now, when you're looking at Eurozone and you're looking at America, these numbers, I think, will only increase month on month. And as you mentioned, 2.1 versus 2.5 or 2.6 million, you're not that far behind. So that re-embracement as far, and another thing, which really is that's really going to drive, I think, consumption more than anything, is the pent-up demand of the young people and old people my age, that old, Sean, the old people that want to get back to Europe or want to get to travel, and they say, well,
I'm young like Laurie. What are you talking about? I'm 25 like Laurie.
Exactly. I'm 35 this year.
There we go.
So there's the issue at hand. Everyone you talk to has only got one agenda, and that is to turn up the fund meter. That is to do stuff now of what you have been denied, and are you going to be denied that over your life?
What about the Chinese on that? I mean, in terms of, they used to were pre-COVID one of the world's biggest tourism travelers in literally hundreds of million a year.
Yeah, exactly right. I want to ask that our team, very much based in Europe, whether they're going to see the Chinese like they do traditionally around, the Eiffel Tower, into the Parthenon, around Rome, and so on. Those big tourist points. And I'm not sure whether you're seeing them in the Middle East. Have you got any?
Peter, I just want to get your thoughts on this. Obviously, we had the comments earlier about the cutbacks in the Chinese quotas for the independent refiners for the second half of the year. But we also have announcements this week of the China's first energy options open to foreign traders on the Shanghai International Energy Exchange. And we have this sort of structural shift in some way, more transparency, more regulatory oversight. How do you sort of summarize that in terms of where China is moving in terms of market management?
Well, Sean, if we highlight last week, which was a very interesting point, we saw copper from the strategic reserves released to market for the first time since '05. We saw zinc and aluminium, I believe, since the first time since '10. These were very similar strategies of what they did over the last couple of decades with pork, of course, with the SARS outbreak. So there's the first point. And China has been very strategic with its Maliha, probably will add certainly some significant horsepower to this, that they've been very, very fortunate to buy very, very cheaply over the last year all base metals and energy. So as they really bought as much as they could for as cheaply as they could. So they've done very, very good strategic buying, and it's been to the betterment of their country. The second part, as far as new markets opening up from options trading and futures trading and exchanges, maybe it's just going to be a change.
Can we expect that that going forward there'll be less activity on the dark side, that the transparency for the market will become a lot more predictable? The case in point being the Iranian barrels, they're rebranded, we don't know how much there are, and so forth.
Exactly right. And it's probably China's way of demonstrating, very much on the front foot, that we're very mindful of across, from a military perspective, from a financial markets perspective, from an economic standpoint. They've certainly marked their territory, and they're growing their territory very aggressively. And possibly their mindset is, let's take on ICE, let's take on NYMEX. And, is this where we are in the next 5 to 10 years, that we are the number one exchange in the world? I don't know, but it's certainly it's very strategic.
Let's have the survey result and give Peter the last word this morning. Survey result tells us, was the market reaction to the Fed's June meeting too extreme? 2-1, yes. The question, Peter, or the answer there, your thoughts also on the outlook for the dollar, the euro. I mean, clearly the Fed signaled last week that they may be the first one into a tightening cycle, and the euro, the sterling, may be a laggard. However fast this happens, but from a currency point of view, we could be moving into a stronger dollar cycle. PMIs coming out tomorrow in Europe. So your thoughts on the direction of travel for currencies?
Well, Sean, and first off, just on the last couple of days when that announcement came out by Jay Powell, there was no doubt that all the traders jumped all over it and they really ramped it down. So they sold equities, they bought dollar, gold capitulated to 1760. So that's just something there that was really, that 48 hours was breathtaking. And even yesterday was a real wake-up call, what we saw in Japan, but they certainly bounced today. Where is the dollar? I think it's got the capacity of maybe a 92.5, 92.6 over the next week and a half. I think the reasoning is that I'm interested to see what Jay Powell says over the next couple of days and those euro numbers. So I think that the overall strength is going to be there, a little bit of a push to the upside for the dollar. It may go back to 91.8 in the short run, just as a little bit of profit taking, and then it'll bounce. So that's what I'm thinking on. I wouldn't be surprised to see gold trend higher again, Sean, over the next couple of months. It's been the best trade ever. Crude, you don't make much money out of because it's very much range bound, but gold has just been extraordinary.
Well, there wraps up our session this morning. I think that may be the first 30-minute podcast in which the word COVID wasn't mentioned. I'll have to go through my word search, but it does strike me that for whatever that means, it means something. Peter, thank you so much for joining us from Sydney, Laurie from Beirut, Maliha from London. Three of my favorite places in the world. Hopefully we'll get to them soon, but we'll catch up to you over the coming days each morning. Thank you very much and have a good day. All the best.
Thank you.
Thank you. Take
Have a
care,
nice
guys.
day.
Bye.
Bye.